5 insiders, $1.5 million, all on the same day, all at the exact same price. On the surface, this looks like the strongest insider buying cluster that we've covered. But when you read the actual filings, and that's what we do here, the story gets a little more complicated and also more interesting. HMH Holding Inc. is an oil and gas field equipment company that went public on April 1st, 2026. The IPO was priced at $20 a share, underwritten by JP Morgan. The next day, April 2nd, 5 Form 4 filings landed with the SEC, showing purchases by the CFO, CEO, CCO, a director, and the CTO, all at exactly $20. Total $1.48 million. Now, if you're just scanning headlines or screening for insider buys, this looks extraordinary. 5 C-suite officers buying on day one. Heavy cluster, real money. But the uniform price is the first clue that this isn't a standard open market purchase, and the footnotes in the filings confirm it. Let's walk through what the filings actually show. CFO Thomas McGee's Form 4 lists 2 transactions, a grant of $97,000 restricted stock units at zero cost, that's standard IPO compensation, and a separate purchase of 50,000 Class A shares at $20, $1 million. The footnote on that purchase says it was made through the directed share program. That's a mechanism where the underwriter, in this case JP Morgan, receives a portion of IPO shares, typically around 5%, for company officers, directors, and their associates. The shares are sold at the IPO price, not at whatever the stock happens to be trading at on the open market. The same structure applies to all 5 purchases. CEO Eirik Bergsvik, $200,000, CCO Roy Durseth, $160,000, and Director Lance Lofer, $100,000, and CTO Paul Skoperbo, $20,000. Every one of them at exactly $20 a share through the same directed share program on the same day. The distinction between the IPO directed share program and open market purchases is an important one to understand if you're using Form 4 data to evaluate insider conviction, and it's one that most screeners and headline scanners can miss. When an insider makes an open market purchase, they're entering the same market that you and I can access. They're choosing the timing. They're accepting the current price, which is set by supply and demand, and they're doing it with information they already have about the company. That's a strong signal because every element of the decision is voluntary and independent. An IPO directed share program is different though. The price is set before trading begins, in this case $20. The shares are reserved by the underwriter for a select group. The insiders aren't competing with public buyers for shares at a market clearing price, and the purchases are subject to a 180-day lockup, which means these insiders can't sell for 6 months regardless of what happens to the stock. Does this mean the purchases aren't meaningful? No, these 5 people still chose to put personal money in. The CFO still wrote a $1 million check. That's not nothing. But it's a different kind of conviction than if the CFO had waited for the stock to start trading, watched it open at $18.90, which it reportedly did below the IPO price, and then gone into the market and bought at whatever price was available. That second scenario would be a stronger signal. What happened here is one step removed from that. This cluster is a useful case study in learning to interpret data from Form 4 filings. There are a few things to watch out for. First, price uniformity. When every insider in a cluster buys at the exact same price down to the penny, that's unusual for open market transactions. Different orders hit the market at different times and usually fill at slightly different prices. Uniform pricing often points to a structured event, an IPO, a secondary offering, or a private placement. Second, footnotes. The SEC requires insiders to explain the nature of their transactions in the footnotes of the Form 4. In this case, the footnotes explicitly reference the directed share program. Those 2 words change the entire interpretation. Third, timing relative to the IPO. A purchase on the day the IPO closes isn't the same as a purchase 3 months later. Both are noted on a Form 4 the same way, but the informational content is different. 3 months in, the insider has seen earnings, market reactions, and analyst coverage. On IPO day, they're making a different decision inside the offering process itself. As always, this video is for informational and educational purposes only and does not constitute investment advice. InsiderCompass is not a broker-dealer or registered investment advisor. Data is sourced from public SEC Form 4 filings. Insider activity does not guarantee future performance. Always do your own research. And here at the end of the video, I would like to ask you to please check out InsiderCompass.com for more information and clusters that we don't always cover in our videos. And thank you for watching.